Hey, welcome everybody to the 40 Finance channel. Got a lot of volatility in the market right now, and that typically means that I need to check in on my TQQQ holdings. If you're new to the channel, I bought into TQQQ here in roughly January or so, kicking off the new year. Fundamental thesis being that very hard to distinguish the FAANG stocks right now, which ones will win more than others. I'm a huge fan of the QQQ, so I'm playing this leverage strategy in a market downturn. And the goal, of course, is to make money, but I'm also prepared to hold this one. Despite the skeptics, I'm still prepared to hold this 3x leverage ETF for the long term. Now, in terms of this current stock market environment, honestly, it's a dream come true. If you're into TQQQ, we've got a ton of bad news, right? And sad to say that that's exactly what you're looking for if you're trying to get compounding returns on this one. So I'm going to hop on the computer here and give you 5 reasons why I'm buying TQQQ this week and probably in the future as well, but more specifically in this current environment. We'll get into stock fundamentals here in a second, but honestly, the first reason to buy into, just about anything, but in my case, TQQQ, is this post here by Josh Brown, who's a CNBC guy. This came out on February 23rd, and the article is fine, but really what we're looking at here is this chart, which kind of maps out all of the geopolitical events that should have had a negative impact on the stock market, and in fact they all did. So if we look at the total drawdown by event, then the days that the bottom occurred, so how long was the bottom, and then the recovery, how long did it take to recover. And I'll skip to the highlights. Nothing was worse than the Pearl Harbor attack back in 1941. The stock market is in a much different place now. Back then, the market dropped 19.8%, and this is S&P 500, and it took 307 days for recovery. Just a terrible day in American history. Now, outside of that event, which was 143 days on the bottom, 307 days for recovery, the next closest thing was Iraq's invasion of Kuwait. That occurred in August of 1990. Total drawdown was minus 17%. The bottom lasted 71 days, and the recovery took 189 days. Now, in terms of something that would have happened in the past 20 years, 22 years, I guess you would say, since 2000, obviously the terrorist attacks, minus 11%. Interesting to note, though, because the government reacted so quickly, you had 11 days at the bottom, and then you had 31 days until recovery. As we know, the terrorist attacks actually turned into a situation where I think Americans got put down a lot of their hatred and differences, right, and worked together on sort of a common enemy, so to speak. Okay, so the bottom line here, without going through every single line item, is the average drawdown was minus 4.6%. It lasted 20 days at the bottom, and it took 43 days to recover. So we have seen a lot of pressure on the stock market for a lot of different reasons. And in my opinion, while the stock market could obviously go down lower, I think if you have any interest in getting in near the bottom for a leveraged ETF like TQQQ, you should be starting that journey now. Buy 1 share, buy 20 shares, whatever your comfort level is, and be prepared, of course, to average down from there. But I think the fear gauge in the stock market right now is very, very high. That's good news if you're looking for an entry point. All right, reason number 2 that I am buying in is that the RSI is below 40. This is a key indicator for me and tells me anytime that the RSI for the TQs goes under 40, then that is a time to buy. That has actually been the situation, it looks like, since February 17th. And even today, the stock market's seeing a little bit of a boost here late in the day, but you still got an RSI in the neighborhood of 37 or so, if that's calculated correctly for today. Reason number 3 that I'm buying into the TQs right now is that the core holdings, we know that QQQ is very top heavy, and so is the T version. And the core holdings are basically FAANG plus Tesla plus NVIDIA at the end of the day. And they have all gotten their share of a trim, of a haircut, right? So these are the performances over extended periods of time. So 5 days, 1 month, year to date. And if we just look at 5 days, I would prefer to really sort this by market cap, but let's just do it this way. Tesla has done the worst in the past 5 days. That is good news if you're trying to buy the TQs at the bottom, right? You want to buy when there's pain. Netflix, minus 6%. NVIDIA, they finally got trimmed, minus 5%. Amazon, minus 5%. Apple, minus 4%. Facebook, minus 3%, which barely tells the story on Facebook because their year to date is minus 41%. Now, if we switch over to valuations, because, you know, price haircuts only really matter if they bring the price down to, you know, a valuation multiple that makes sense. There's some things that I've personally been waiting for that are starting to show up on the board. Microsoft is finally under just barely a 30 PE, both trailing and forward in this case. Apple getting closer to 25. Not necessarily historically cheap, but a heck of a lot better than when it was at 35. Google's in the low 20s. Amazon here, they have a sort of wacky EPS environment this year because of how much they're putting into the company. So you really got to wait till the back half of the year, to be honest, on Amazon. But I'll take it while it has been down as well. Tesla. Now with Tesla, from a forward standpoint, you got a PE under 100, right? So I'm not saying that that's a fair price, but I will tell you it's a hell of a lot better than it was 2-ish years ago. Even NVIDIA, you know, on the chip side, you probably want to be 20s, maybe 30s. NVIDIA has always been a rule breaker here, but at least 4 P's down to 40, so it's a start. Then Facebook, just ridiculously undervalued. Cisco, which is a stock buyback company, they look pretty good. Then Broadcom, 17x, that's about fair for a chip company. You know, these 1, 2, 3, 4, 5, 6, 7 companies that are right here probably make up 50% of what we have in the QQQ today. So seeing them take a ding, in my opinion, makes it all the more compelling to try to get in on TQQQ. All right, let's look at a chart view of the regular Qs. And if you've watched some of my earlier videos, you see the peak here was about 402. It might have got to 404 one day. That's a number that rings in my head. However, my bottom price, if you will, for the Qs was 320 in this environment. So I said a 20% haircut, I could see that. And we got pretty darn close to that. Now, you can see on this little bump that the market started to go back up, but yesterday we were 329 or so. So I thought we were heading to the 320s, and the algos or something jumped in here, and we're back to 336. So I personally thought that 320 for the Qs was a very strong bottom point. And I'd love to tell you there's some scientific research behind the 320 number, but there's really not. It just feels like a 20% haircut in the era of algorithmic trading, not to mention all the news headlines that have come in that have been negative. To me, it just feels like that's about the place for me, in my opinion, where it's as bad as it could possibly get. Bottom line, if you believe anything I just said about the 320 number, then you know that we are very close to the QQQ bottom. Okay, reason number 5 that I'm buying into the TQs right now is the fact that I'm getting closer to my 100 shares. So I have 50 as of today. It's 50 shares. Let me double check this. I have 50 shares at $50.67. And I just lowered that cost basis from 53 or 54 with some purchases today. So I'm keeping pace with the drop of the TQs, but I'm not quite positive yet. But I'm getting so close, and for reasons 1 through 4 that we already have discussed, my next goal is probably to get to the 100 shares so I can take part in these call options that come up every week for the TQQQ. Now, I haven't decided exactly how I'll play this yet. They will be covered calls, and I'm only going to play it on the way up. That's just my mentality, and emotionally, that's where I feel comfortable. But even if it was today and you were looking out to March 4, where did that go? And you just put a covered call in for, looks like 52.50, would still make you $100 by the end of next week. Now, obviously, the downside is you could get your shares, called away in that particular scenario. But the reason I'm calling this out here is because this is the March 4th options chain. All right, this isn't 100 years in the future. This is like 8 days. And with that, you get a feel for, just how much holding 100 shares of TQQQ can bring you in the right situation. So after studying some of this stuff this week, I've come to the conclusion I got to get my 100 shares of TQQQ. The good news is, compared to, let's say, an Amazon or a Google or something like that, 100 shares is less than $5,000 today. That's not going to be a good price for everybody, but it's certainly much more acquirable than a lot of stocks that are on the market right now. All right, guys, so those are the 5 reasons that I'm buying into the TQs right now. Number 1, we have some historical data that shows us that the impact of war on the stock market could potentially be overblown. Number 2, we looked at the valuation and price changes for the Qs, and at least the top holdings. I'm not going to say that they're all cheap, but they've definitely gotten a haircut here recently, which is good news in terms of buying in at a low starting position. Next, we've got the RSI levels. For me, anyway, on the Qs, I'm looking for RSI under 40, and we've had a nice little stretch of 5 or 6 days of that exact scenario. And then lastly, for myself anyhow, I want to get to that 100 shares, and I feel pretty good that the Qs are close to their bottom. That's just my opinion. So if I can, I'd like to try to pull off 100 total shares of the TQs, because the options environment is certainly profitable. There's risk involved with getting stuff called away, but at least for me, with doing covered calls, even if stuff gets called away, the way I'll set it up is I'll make a profit no matter what. Thanks as always for watching, and if you're interested in SeekingAlpha, which was the platform I used a lot of on this video today, check out in the description for a nice discount on a 1-year subscription to SeekingAlpha. Hope you guys find that useful, and as always, please give the video a like, share with your friends. We'll see you on the next one.